Good morning, or at least it is here in Nashville. Wherever you may be, thank you so much for joining. Today is going to be a bit different and very special. We have Chris Perkins on, the president of Coinfund. We have Stephen McClurg, Valkyrie's co-founder and CIO. And instead of advisors asking Stephen and putting him in the hot seat, I get to put both gentlemen in the hot seat today. We're definitely going to span a lot of topics. We're going to go from macroeconomics and what they're seeing on the global stage and how cryptocurrencies fit in, from CBDCs to stable coins. We're going to talk about, have institutions really joined yet? And then look at venture capital and what they're seeing in NFTs and anything else that they may find interesting. Feel free to put questions into the QA. I'll be looking at it, although we'll see how many we can get in today. I'll try my best. So without further ado, Chris, thank you so much for joining us today.
Hey, thanks, Leah, and happy International Women's Day to you.
Thank you. I appreciate that a lot. Stephen, good morning. How are you?
Good morning, Leah. Fantastic.
Fantastic. Well, Chris, I'm going to turn it to you for a moment. Can you tell everybody about your background?
Sure. Thank you. Yeah, I was a U.S. Marine for 9 years, served in the Battle of Ramadi. So my heart goes out to what's happening in Ukraine. I understand the human cost of war. I understand the human cost of urban combat, and that's something that's weighing on me. So I wanted to get that off my chest. After my term of service, I moved into traditional finance for 15 years, starting first at Lehman Brothers, where I got into the derivatives industry. Sunk that to the bottom. And then I did 13 years at Citi, where I was in charge of building our cleared regulated derivatives platform, taking the $700 trillion derivatives industry from unregulated to regulated after the crisis. We built a leading business there. I was also running our foreign exchange prime brokerage. And then by the time I left, I was co-head of our global futures division as well. So futures, clearing, foreign exchange prime brokerage. That said, I needed to make the move across to crypto because I couldn't stop thinking about it. I started getting into the space in 2016, and today I serve as the president of Coinfund. Coinfund was one of the original crypto native investment firms, started in 2015, and I'm happy to tell you a little bit more about that in the future.
Perfect. Thank you so much, Chris. And Stephen, can you tell us a little bit about your background as well?
Yeah, thanks, Leah. So most of my background is in traditional finance, both in private equity and bond portfolio management. Most of the time at Guggenheim Partners, but also other shops. I got into blockchain in about 2016 in the business side, and then got into the asset management side of this business back in 2017. And then of course, here we are today at Valkyrie.
I love it. Well, Stephen, with the TradFi background, actually, both of you guys have it. I'm going to turn it to you first. Just to start us off today, what are you seeing in the global markets as an economist? How are you seeing macro econ events, and how does crypto even play into what you're seeing right now?
Yeah, so we're in a really interesting, in my opinion, inflationary cycle that really started about 12 years ago, or even now about 13 years ago, starting in 2009. So what happened, of course, in 2009 is that money essentially froze through the credit markets. And from a policy standpoint, the United States, Japan, Europe, the UK, most other major economies decided to start creating more money and to flood the markets with new money to try to get the velocity of money up. As everyone knows, monetary supply is one of the things that can kickstart an economy and getting people back into markets. So that really began back in 2009. And there was at one point the Fed decided to try to pull back. It didn't quite work, so they had to stay flat. And then of course, in the last 2 years, we really started increasing the monetary supply again. So a lot of that pent up inflation from 13 years ago started creeping in, of course, in 2018. And then in this last cycle of monetary policy, we've seen inflation really go through the roof. So I wouldn't necessarily call this a hyperinflationary environment, but it's very close to one. and it could get there very quickly. Even current wheat and oil and nickel prices, you know, a lot of people have pretty short memories and are pointing to the Russia-Ukraine conflict. But this has really been in the works for the last 2 years, and in reality, the last 13 years. I expect inflation to continue to persist, if not go higher, and it's certainly not transitory. I certainly think that a lot of commodity prices are going to continue to go up, but that also is good for a lot of equities as well. So from what we're seeing in the research we're doing, you know, all asset prices will likely continue to go up from here.
Thanks, Stephen. And Chris, what are you seeing?
No, I think it's Stephen makes some very good points around the inflationary cycle. And if you zoom out and you look at Bitcoin as a proxy, you know, with 21 million coins ever to come into existence, it does demonstrate anti-inflationary capabilities. And if you zoom out, you've seen just that. At the same time, you know, recently, you know, you haven't seen as inflation has printed higher and higher, you haven't seen it absolutely go through the roof and maybe manifest those anti-inflationary properties. And part of that is because some market participants perceive it as a risk-on asset. And it is, it's new, and that brings with it a little bit of risk. But if you zoom out again, as it matures, you know, I personally believe that as a proxy for the crypto space, you know, you'll continue, it'll start behaving as it was designed in an anti-inflationary manner. But, you know, we're also seeing a lot of tailwinds, macro tailwinds coming into the crypto space. You know, if you step out and you look at just general trends, we're seeing an incredible migration of talent leaving places like traditional finance, coming into this space. We're seeing institutional adoption, which we can unpack in a little bit. It's coming. I would say that it's not here yet at all. When I was in Citi in 2017, people would say, Chris, get me into this market. I got to get into it. And I'd say, are you speaking for yourself or for your institution? They say, myself, my institution would never touch this stuff. When I left, you know, Citi 7 months ago, every single institution was trying to get into this space, but they couldn't figure it out. Number one, because they were losing talent. Number two, they didn't have the infrastructure. They will say it was because of regulation and reputational risk, but we can talk about that as well, because things like Bitcoin, the regulation is perfectly defined. It's a commodity. And so the point there is that institutions are coming, they're not in yet, and that will also lead to a macro tailwind. Third, you're seeing political de-risking, and this is getting more complex now with sanctions, which we're going to talk about. But generally speaking, you're seeing the left and the right aligning on a couple of things right now. They're aligning, you know, yes, they were aligned that China, they had a bit of an issue with. Now they're aligning on the Russia-Ukraine situation. But if you look at the left and the right, the left is now coming on board and they're saying, well, wait a second. Cryptocurrencies address some of my concerns that I've had. You know, in many cases, I feel as though I've been disenfranchised for a very long time. So certain communities, well, maybe, you know, cryptocurrencies will help with my remittances. And so you're seeing more broad-based adoption amongst Democrats. And so this bipartisan support going into midterms, we think is going to be a very nice tailwind for the overarching industry. And so those are some of the themes that I think are going to be putting, you know, more and more, breathing more life as that adoption takes hold.
Chris, you actually bring up some really good points about how Bitcoin is being treated. And if you look at the earlier days of Bitcoin, really, I mean, well, let's talk about 2011 through about 2016. Really, a lot of the price increase there was due to the adoption curve. Right, just more and more people getting involved in the network, buying a piece of it, transacting in it, and that's adoption curve. You know, that's just you know, really more like early stage VC or tech type growth. And then again in 2016, you started seeing correlations to other traditional markets. In 2016 and 2017, it was a little bit more correlated to, say, the Korean stock market. 2018, it was more like the Chinese, you know, the Shanghai index, and then it became more correlated to, you know, NASDAQ and S&P. And you're right, it's the way that people have treated the asset, right? And if you treat it like a risk asset, it's going to behave like one. And when there's events that happen and the stock market's closed in the U.S., well, what are you going to buy or sell? You're going to buy or sell Bitcoin because it's a risk asset that is traded outside market hours. And what I see us going into, I think we've got one more stage, but it's sort of related to inflation. I think we're going to become a little bit less correlated to equities this year, and we're going to look a little bit more like commodities because commodities have limited supply. Bitcoin has limited supply, and people are going to run to those types of investments and start building that correlation alongside commodities. And then I think the next stage is a little bit more inflationary, where it's going to be an anti-inflationary hedge against currencies. So I think we're getting really close to that. But you're right. I mean, we're still treating it like a risk asset, therefore it behaves like one.
I totally agree. I love the analogy to commodities, and I do think it's going to break out at a certain point. I love that you mentioned commodities as well, because one of the challenges with institutional adoption is around the regulatory treatment. And a lot of people don't realize this, but in the United States, everything in the world, according to US law and regulation, everything in the world is a commodity, except for securities, onions, and movie receipts. And, commodities are perfectly regulated right now. The CFTC has the authority. They actually regulate derivatives on commodities. And for commodities themselves, they have full authorization to regulate them in cases of fraud, manipulation, and abuse, which we like. And so another de-risking that you will see over time, as policymakers start pivoting from the defense to the offense, is figuring out the right regime here in the States. And we're starting to see that, as I mentioned, across the left and the right.
Very interesting. And Chris, before I do ask you about sanctions, Stephen, I just wanted to pick up on something Chris was saying. Do you agree with him about institutions not being in yet? I'll just say it felt like very different conversations last year when we started Valkyrie, when we were talking to, various institutions in January when our trust launched to the end of the year. But I wouldn't say that we could really say institutions are in yet. But how do you feel?
Yeah, well, maybe before we have the conversation, we should define the categories of institutions, right? When a lot of people, when they say institutional investors, they just mean, anybody with an incorporation or an LLC or any kind of money behind them. I define institutional investors as, the three major categories of money in the world, which is, sovereign wealth funds, pension funds, and insurance companies. Some people also include trust and endowments. I kind of bucket those in a little bit, sometimes institutional, sometimes in the intermediary channel, which would be anything that's bought or sold through an RIA intermediary. And then, of course, beyond that, then you've got fast money, which is hedge funds, right? So and then retail. So given those categories, I think the institutional investor is extremely curious, trying to figure out how to access it, and just can't, right? The CIO of a fireman's pension fund isn't going to go open up a Coinbase account and put pension money in Coinbase, right? They're going to have to do it through a fund. They're going to have to do it through something creative that may not even look like, say, Bitcoin or some other asset. Same thing with intermediary channels, right? Like your big wirehouses. They're going to have to go through some type of fund. A lot of the ones that we've talked to, they don't want a fund that holds Bitcoin directly. And as a matter of fact, some of these macro funds, mutual funds that put a sleeve of Bitcoin or something else in it, have been threatened to be kicked off of platforms because they hold physical Bitcoin. And so they've changed back their investment thesis away from holding Bitcoin or a fund of Bitcoin. That being said, what's interesting to a lot of these groups are things like Bitcoin miners, right? It's a company, especially publicly traded ones, publicly traded company that mines Bitcoin, does all the infrastructure around it. Yeah, they've got a lot of exposure, but they're not directly involved. And even more so, companies that have ties or a business around Bitcoin or blockchain that's not a miner, right? And in some cases, companies that hold Bitcoin on their balance sheet, like MicroStrategies and Tesla. So that's where a lot of the access points are at the moment. I think it's going to change. And then very, very few of the bigger institutions, and I say institutions broadly across institutional and intermediary investors, where they might hold a fund that holds Bitcoin or some other asset class, or even a DeFi fund, but it's still very rare right now. But I think it's going to, and I think it's changing very quickly. I mean, obviously through our conversations, and some of our clients, that have already invested, we're seeing a lot of demand, but it's just going to be a slower sell cycle for a lot of these people to get in.
Yeah, maybe I can add a couple of things. I think there was a large discussion around reputational risk, right? I have reputational risk if I enter this market. But now, as people are unpacking the data, Bitcoin best performing asset class in 8 of the last 10 years, the narrative's changing and saying, oh my gosh, what's the reputational risk for me not being in this market? And so what we're seeing across the board is that working groups are being formed and the narrative is shifting and saying, okay, I'm going to get my ops lady, my trading lady, I'm going to create this task force of various people, my trading guy, and we're going to come together because we have to figure out the operations, right? Because it's largely an operational challenge. They form these working groups, and then what happens is the light bulb goes on, like, wow, we have to really shift our infrastructure from something that's slow and batch driven by the 1990s technology into something that's 24/7. Well, that's really hard. And then they go down the rabbit hole, they get super excited, and then they leave because of the opportunities in crypto. And so it's taking institutions that much longer because of that people gap to come in. But like I said earlier, I do think that they're absolutely coming. It's just very hard for them to get that direct token exposure.
Makes sense. And switching back to sanctions, Chris, you had mentioned before, I think that obviously that is the hot topic. It's being talked about a lot. So I'm excited for you guys to demystify what we're looking at here, because there are a variety of perspectives that you'll see in the news about sanctions and cryptocurrencies. So just simply, how do we address this issue of sanctions, around sanctions and cryptocurrencies?
Yeah, I think anytime there's a war, it accelerates trends. And we're seeing crypto being used and adopted in some really interesting ways within Ukraine right now. People are directly able to contribute to folks on the ground in Ukraine. I think like $60 million has been raised, cross-border payments in an environment where banks have broken down and it's very difficult to leverage them. You can actually send cryptocurrencies to refugees or to help supply folks in the Ukraine. So that's a good narrative. The contra narrative is okay. The Russians can use this technology to evade sanctions, and there's a lot of talk about that throughout policy circles. And I think it's something that's super important to address head on. Is it possible to trade cryptocurrencies with somebody who is on the OFAC list? And it is operationally possible. But if you step back and you look at the data, Chainalysis put out a report not too long ago, and they cited that 0.15% of transactions that are done, according to their analysis, were illicit. And I was speaking last night to a guy named Jerry Bordeaux from Coin Center, and he made a really interesting case. He said, if you talk to law enforcement or the folks in Treasury on the ground, they actually love cryptocurrency. Why? Because one of the challenges is that it's too transparent, right? And in traditional law enforcement, they find the guy, but they can't find the transactions. Here, they have the transactions, they got to find the guy or the state. And that's much easier, by the way. And you've seen that recently with some of the Bitcoin. I think that was stolen back in 2016. But the conclusion is as follows: first, the infrastructure in its current form doesn't have the scale and the strategy to provide nation state evasion of sanctions. It just doesn't. Somebody puts on, I think we seized over $600 billion, $600-700 billion in Russian assets. That's like 1/3 of the entire crypto market cap, right? So we just don't have the infrastructure and scale for folks to evade sanctions on a massive scale, right? However, clearly there's technologies in development where, over time, through the development of things such as CBDCs, can nation states trade with other nation states in a very seamless way and avoid, some of the intermediary controls that we have within SWIFT? I think so. And we have to get in front of that now. But my conclusion is that though possible, it's just not a good way to evade sanctions with the current way the infrastructure is set up.
Thanks, Chris. And Stephen, do you think the adoption of stablecoins and CBDCs could potentially be an alternative route to potentially undermine sanctions, or just feel free to respond to Chris?
Yeah, sort of. I mean, if you look exactly what's happening right now, there's a lot of alarmists that are saying, "Oh, look at Bitcoin. It's a way for the Russian government to avoid sanctions." But the reality is this: if you look at first of all, if you look at what Russia's doing from a monetary policy perspective right now, it's buying and transacting in renminbi. China's already done a great job of investing in and partnering with emerging market countries that are commodity producers and utilizing renminbi as a currency between those transactions instead of going between the dollar. So Russia is able to access other markets that way, number one. Number two, what they're actually doing, and as a government, is not using Bitcoin. They're using gold, and they're taking their gold supplies and pegging the ruble to gold, and that way they can strengthen the ruble. But the people that are really transacting in Bitcoin are the everyday citizens that are out there that are trying to get off the ruble, right, and get out of the banking system. And if we're trying to put sanctions on getting Bitcoin or other cryptocurrencies in the hands of the citizens of Russia who are trying to get off the ruble, that's actually a bad idea. It has the opposite effect. We should be encouraging it. We should be encouraging Russian citizens to use Bitcoin, because now they're dumping rubles, and that hurts the Russian government. So anyway, I think that's a really important point to make. The other thing is despite the sanctions that were put in place, a few weeks ago, I don't know if anybody else finds it odd that it's not until today that we're announcing that we're going to stop importing oil from Russia. So that's really the main import, that we work with them on. And by the way, it doesn't even account for, it accounts for less than 3% of all U.S. oil. So it's not, number one, it's not the reason why gas is going up, right? Gasoline prices were already going up. Oil prices were already going up. Us blocking or us stopping the import of Russian oil isn't really changing a whole lot. And then if you look at Western Europe, who's against the war, they're certainly not cutting off, imports of Russian gas and oil, right? I mean, could you imagine being in Germany right now and say, yeah, we're not going to take Russian gas, and we're kind of still in winter, so how are people going to heat their homes? So sanctions aren't important enough to cripple the Russian economy by not paying for energy, is what I'm going to say. That's the bigger issue here. So I'm just going to say, it's saying that Bitcoin is undermining sanctions is a complete falsehood. And as a matter of fact, Bitcoin, like I said, should be put into the hands of the people of Russia and Ukraine to transact with each other and go completely off of the ruble.
It's interesting, Stephen. Chris, I'll let you respond to Stephen. I just wanted to throw a hat tip to my partner here. We were on a podcast 2 weeks before oil rates went negative, and Stephen called it. And it was with Peter McCormick. And I remember, me and Peter being like, how would that be possible? And they did go negative. So Stephen, you have a very good, astute eye for watching ONG. Chris, would you like to respond to what Stephen's saying? I don't know if you agree or disagree.
No, I agree completely. And as I said, I just don't think Bitcoin is the big bad wolf here, or other cryptocurrencies. And there's some very positive use cases for their deployment to actually provide humanitarian assistance in many cases. I think there's going to be ongoing debate in the U.S. around our adoption of CBDCs. And I think that there are, the Hoover Institute just released a paper. I encourage people to read it. But I do think we're going to have to get our heads around, is that a good idea or is it a bad idea? And what role should stablecoins have going forward from a policy perspective? Clearly, if designed right and thoughtfully regulated, it'll be a really interesting source of U.S. Treasury demand. And I think that there will be strong policy interest in having, robust stable coins that continue to fuel the international economy. And I think, we have to be really careful in the adoption of central bank digital currency. The Chinese have deployed the digital yuan, and it makes people say, China is against crypto. To the contrary, they love crypto. They're just using the technology to advance their ideals. Single party system, single party wallet, single party currency. And totally understand why they're doing it. We just have to be mindful and ensure that to the extent we deploy a CBDC, that we deploy one in accordance with our values, to ensure that people that rights and individual freedoms are not impacted.
Yeah. Well, one thing that I want to mention on CBDCs is that they are all that have been developed and are being developed currently are all very centralized in nature. It might be using some blockchain rails, but it is very centralized. More can be created. There's definitely not a limited supply like you have with Bitcoin. It does make it easier to transact and trade across other currencies. But I don't really see it as something. I don't really see it as something that's that much different than a lot of digital greenbacks and digital currencies that exist today, other than the interoperability. If there is going to be interoperability, depending on what chains that they're built on, between other currencies. So I think it's an improvement, and it's a more transparent improvement for a lot of countries. But I still don't think it achieves the solution that Bitcoin achieved.
Thanks, Stephen. And Chris, do you agree? And also, because not everybody, I'm seeing the attendee list, not everybody is from the crypto world. Do you see use cases being different with stablecoins, CBDCs, and maybe could you break those two up for everybody on the call too?
I think it's early days to see how this matures. There's plenty of use cases today for the use of CBD for the use of stable coins. You can take them, go to defirates.com and see the yield that you can generate, and then look at that against your bank account, and you'll start seeing that there are opportunities to leverage stable coins within the entire DeFi space. You can use it to yield farm. There's so many there's incredible applicability to leverage those assets to generate yields and to power a lot of the decentralized ecosystems. We haven't come up with a policy response yet on a US CBDC. Again, I think you need to be mindful of how it will be deployed, who will be able to see those transactions, is there privacy, et cetera. I do have some personal concerns about widespread use and deployment if we have a strong policy, private alternative that's thoughtfully regulated. So I think it's still early days in how this matures. There are a lot of people that's saying that they should coexist, and people should have the ability to leverage both. But it's still early days.
That makes sense, Chris. Stephen, generally about stable coins, because you do have an expertise. Are you bullish stable coins, and where do you see the most important use cases of stable coins, moving forward in the future?
Yeah, I think once a CBDC is developed in the US, it'll probably replace US focused stable coins or US based stable coins. I'm not that bullish on them. I want to be, but the reason I'm not is, I think that there's been a lot of attacks on stable coins from whether it's the New York Attorney General, New Jersey Attorney General, the SEC, the Senate, and there is a good argument to be made that it's essentially, I mean, I've heard this argument that it's counterfeit dollars. You're creating something that looks and feels like a dollar and transacts like a dollar, yet it's not, and it doesn't come from the U.S. Treasury. So I think that argument will be used more. I mean, I'm a fan of stable coins because if you're a trader and you and are trading in crypto and you want to move between exchanges really quickly at a very low cost, stable coins are the best way to do it at the moment. But once there is a, let's just call it a state-sponsored alternative, then I think that there'll be a lot of there'll be a lot more attacks on non-state sponsored stablecoins. I mean, if you just look at the Tether, the whole Tether situation, and read some of the court documents, I mean, they're trying everything they can to shut down Tether in the U.S.
I don't know if I agree with that. I think that you'll see a well-regulated stablecoin regime emerge in the United States. I spoke to Randy Quarles back in July, and he said, "Chris, I'm not going to let the industry Uber me with stablecoins." And so I do know that they're very focused on a regulatory outcome, and you see companies like Circle really focusing on providing a regulated alternative. And once you have, and one of the challenges that I think we have in the U.S. right now is that we don't have predictable regulation in many of these cases. There's enough gray that it's hard for entrepreneurs to build. But if you think about our company, we like regulation. We want there to be the rails and the predictability so that we can build and grow. I do think that you're going to get those rails pretty quickly in the stablecoin space. And then it'll be really, and then once you have those rails, it's about building the compliance layer and scaling.
Yeah. I mean, look, and where we stand right now, we do a lot in stable coins, and we farm yield through stable coins, and we use Circle, and I think it's a fantastic platform. But we definitely have one eye open at night and watching this very closely. So it's definitely not for the faint of heart. I mean, there's a reason why the yields are higher in stablecoin pools, and it's because there is some risk there. But as long as you're aware of the risk and you mitigate that risk, I think it's a good risk to take.
Agreed. Yeah.
Chris, let's continue on this theme, which is, and as we migrate into venture capital, what are other major trends you're seeing as a venture capitalist that you believe is impacting adoption?
Yeah, so we look across a number of different themes in this new world that we call Web3. And for those of you who don't know the difference, Web 1 was like hunter-gatherers, very disorganized, every person for themselves. Web 2 came very strong centralization, great user experience, but all the economics accreted up to like the king, the sovereign. There's only a couple of people, very centralized. And we're like the serfs working the land. They take our data and they monetize it, but we get a great user experience in return. In Web 3, we have the capability now to introduce private property into the internet. And there's also the ability through things such as DAOs to deliver more democratic governance. And so it's almost like tracing the evolution of civilization. And we think that this is going to be, one of the biggest changes that, we think it's going to be bigger than the internet itself when you bring together the new capabilities that Web3 delivers. There are a number of different verticals we look at. They're all super exciting. We do look at gaming. We look at NFTs. We look at infrastructure. We look at DeFi. We look at things like DAOs. And there's incredible innovation happening across all those streams. And in some ways, they're interconnected because you can buy an NFT, you can play it in a game, you can financialize it through DeFi. And these are all things that are being built right now. You step back and you have a community of people that are focused on an ideal. That's a DAO. And so these themes are also coming together. The other thing on the infrastructure front, we look at a variety of layer ones, which are, your backbone blockchains. We look at layer twos for scaling. There's an entire interesting layer right now that's being worked through, and that's really the user experience. For those of you who have entered into Web3 right now, and you open up your MetaMask wallet, and then you bridge over to another chain, that whole user experience right now is a little bit, let's call it clunky. So we're also seeing a theme of number of Web2 developers coming into the space, and I think over time you'll start seeing that user experience really improve. But anyway, super exciting times. Oftentimes as well, when the markets are a little bit clunky, it's an incredible time for building, and we're seeing building happening everywhere.
Absolutely true. Stephen, what's your thoughts on what Chris is saying?
Yeah, so DeFi is where I'm the most interested in, and I think it has more to do with my background. But a lot of what's happening in DeFi reminds me of repo markets, which if you know how to invest and trade them properly, there's a lot of money to be made in that particular area. So DeFi reminds me a lot of that. I think as more people come in to that market, the yields are definitely going to come down. They're definitely going to compress. The arbitrage is going to slowly start going away. But it is a much more democratic way to play repo and reverse repo. Particularly coming from an old bond guy, where you're staking bonds to get a yield. In this case, you're staking stable coins and other DeFi tokens. That's the most interesting. I think the things that are going to happen much longer out in the future, much further out in the future, is the gaming side. I think everybody in crypto is trying too hard to put gaming on blockchain. Today and yesterday, and I think the tech needs to be built out a lot more in order to build good, solid, great user experience games that people are going to utilize. The one area though that a lot of people don't think about when they're talking about games, a lot of us when we talk about games are thinking about the shooter up games and more action style games. But one area that I think is interesting, more short run, is casual gaming. And casual gaming, even though they don't command the type of price tags as some of the other games do, it's a lot more subtle. It's a lot more mass consumed, and those are the types of games that I think they're going to be first, right? And like I said, it's not going to be big dollar signs per game, but if you look at it en masse, it's a massive opportunity. And it even goes back to I remember in my couple of years that I was at EA, when I wasn't in traditional finance, there were three major divisions of the company, and the biggest division by far that nobody thought of was the casual gaming division, particularly games like Sims and SimCity and Solitaire, things that you don't think of as high interest games, but it is it has so many more users than all other games put together, and I think that's where the opportunity is.
If I could just add one thing, when you think about it through a venture lens, Bitcoin came around white paper 2008, Ethereum 2014, 2015. The vast preponderance of the assets we look at and protocols less than 5 years old. So in a way, the entire space is venture. And in certain cases, you get the benefit of liquidity along with that venture exposure, because the tokens trade in a liquid manner. So it's a super exciting time.
Chris, just following up on what Stephen's saying, are you also looking at crypto gaming? And does this, do you agree with Stephen when you mentioned that there's a lot to be done on the UI side? I would see that as being directly related to some of the crypto games that we're talking about.
I mean, absolutely. The UI experience has to improve, and it will. Like I said, the entire space is less than 5 years old. Axie Infinity, I think, has been a really good way to prove the model that, wow, People can come off the streets in the Philippines and make a living in a play to earn game. So we're onto something here. Admittedly, the user experience will need to improve and evolve, and the speed at which we're seeing innovation. I think Stephen and I differ a little bit. What's the timeline? Is it 5 years? Is it 2 years? Is it 1 year? I think it's going to happen quicker than people think, just because of the pace of innovation that I'm seeing. But once that user adoption once that user experience is sorted, I do anticipate more widespread adoption. And then there's this like interoperability thing that I think is interesting. As you think about it, and I said earlier, you can buy an NFT, you can play it in a game, you can loan it, you can sell it, you can borrow it, and there's your interconnectedness with DeFi. And then, you're playing this game, you're part of a community, right? And there's real similarities now on what we're seeing with DAOs, and DAOs are just an absolutely fascinating space.
That's really interesting. And Stephen, have you been buying some pretty cool skins in games as well? Do you
No.
what's
They're a whale, Stephen.
By the way, I'm the type of gamer, like I still play video games. I know I'm the creepy old guy that plays video games still. But when I play Fortnite, I refuse to do any in-app activity, in-app purchases. I do like the boring old skin that everybody makes fun of, and I just play the game. I don't care about how I look like. I don't care how I look on the game. I don't care, what my skin is. I don't care about any of that stuff. I'm the guy that just tries to avoid all of those rules. I will never make an in-app purchase on any games, period.
Although you're probably an outlier, Stephen.
I am the outlier, and I know I am.
I think your kids probably make fun of you for having a very boring skin.
They spend more money on skins than I spend on clothes.
So I guess just one last question, and I think we can wrap up fairly soon, is just, what are your thoughts? Chris mentioned that you guys may have different time horizons on how you see various technologies with NFTs and crypto gaming needing to be shipped, needing to be developed. If we're even talking about in-app gaming as an example, what timelines are you looking at to test user case?
Yeah, I think it's going to be, I think GameFi is a little further out. But by the way, I do like NFTs a lot. I like certain NFTs. I think some were just a little too early and eager on. If you go back to what I was just talking about on skins, I don't buy any at all, so I'm not the audience. But out of the people that do buy skins, there's a cycle of about every 30 days, and you're buying the new skin that comes out 30 days, and if you're wearing the one that was 30 days ago or 60 days ago, then you're a loser, right? And this is how this is how they keep you going, right? I mean, so the companies that are creating these things, they have to get you to buy the next hottest thing. Therefore, the old things might start fading out into the background, right? Sort of like toys, right? It's similar concept. So I think that some of these NFTs are hypes. They're hype cycles. We're already starting to see some of them fade out a little bit. And then as far as GameFi goes, like I said, I think some of the casual games are going to be first, and it's not going to make a big, it's not going to make a big splash because they're not, I guess they're not sexy, right? But the ones that are more intense, the more intense games, they just need a lot more of a network to work on, right? And there was a lot of promise when EOS was getting launched that, oh yeah, all the gamers are going to come build here, and nothing happened, right? And then and now we've got some other chains that are supposed to be even faster. I just think that we're probably a couple of cycles away from being able to build, even kind of medium medium action games on any of these chains. So yeah, I think early on it's going to be way more casual in nature, like trading card type thing, or solitaire, is a good example of games that people play. But I think we're probably another 5 years out from anything that's really significant with higher price tags on them.
If I could make a comment on NFTs, don't think of them as, JPEGs. Don't think of them in many cases as art. There's some incredible art on there, by the way. But for many of these, what we call 10K series, right? Crypto is about community. And by buying into one of these 10K series, you become part of that community. And in a way, it feeds into this innately tribal instinct that we as humans have to be part of communities that are, focused on certain values, or maybe they're exclusionary. You want to get into the club. I'll give you one experience is Women's Rise, right? So again, a 10,000K series, a 10K series where they're trying to focus on women's rights, women's empowerment, and they're ultimately funding schools in the metaverse for girls in Afghanistan. Like, it attracts a certain type of community, right? And that is one of the ways that value is derived. I think it's a fascinating concept. I think it's going to be a big part of the future. The other thing is that, look, we spend about 50% of our time online right now. As our children get older, that number seems to be only going up every single year. And so how do you represent yourself in this new world where you're always online? Certain PFPs are status symbols. The Rolex that you have on your wrist doesn't go very far in the metaverse. It's that community that you're so happy and proud to be part of.
Well, one of the examples that I use a lot is, especially when I'm talking to financial advisors or other people in the finance world, is, how many people do you know that are members of a golf club? And of course, they're a member of a golf club and every one of their friends is. I say, well, how often do you buy the swag in your golf club that advertises the fact that you're a member there? And when you go pick up your kids from school or you go to events, you're wearing the polo with your golf club's emblem prominently on your chest so that everybody knows how much, how much you're a part of that club. And you're maybe showing it off to 50 people a day. Well, online, you're showing it off to millions of people a day, and everybody wants to be a part of that club. However, it's really important to identify with the right club and to choose the right club, because just like that polo will get worn out and may not be cool one day, or the club that you were a member of isn't cool one day because a new golf club was built right next door. You have to be very cautious on which NFT membership to be a part of. We if I remember, a lot of us, you might be too young, Leah, but a lot of us used to be part of this community that was created by this guy named Tom. And we all interacted with each other, and then Tom sold his company to some other company, and then everybody went to Facebook. So it's, I think we're pretty early in trying to identify which club will be the cool club. And some of them have kind of popped up and said, "Hey, I'm the cool club now," and people are jumping on that cool club. But we'll see where people go to. And so I always kind of want to warn people that if you're an individual investor, don't throw all your money on a single NFT to be part of a club, because 6 months from now it may not be the cool club anymore.
Stephen, great point. I love the point that you made on globalization, right? And it transcends NFTs to the entire Web3 community. Everything that is released in this space, whether it's DeFi, NFTs, layer ones, they're instantaneously global, right? Instantaneously global. So you go back to that NFT project, 10,000 made, everyone buys two, so there's 5,000. That's 5,000 in the whole world that anyone can access, and that's super, super exciting.
Yeah, and it's hard. Look, I think Chris, you're in the business of this. We're in the business of this, right? Where we're trying to identify which digital assets are going to last or make money in the short run or the medium term on behalf of others. So it's a hard thing to do. It's not something for the faint of heart or for widows and orphans. That's right.
Well, gentlemen, thank you so much. Chris, just to end us here, can you tell us a little bit more about Coinfund and, just a little bit more about your fund and what you're up to, if there's anything you want anyone to hear?
No, thank you for that. Yeah, we're a crypto native investment management company started in 2015. We have seed, pre-seed strategies. We have venture strategies, and we have a liquid strategy. We just, we love the crypto space. It's something that we've been operating in a very long time, and that's us.
That's perfect. All right. Well, Stephen, Chris, thank you so much for joining us today. This was fantastic. Definitely spanned a lot of topics, and I love that I got to be question master and learn from you guys. So I appreciate that a lot. Listeners, everybody, thank you so much for joining us today for Bitcoin Answers. You can follow up with us for CE credit. And again, just Chris, thanks for joining.
Thank you for having me.
Thank you, Stephen.
Thank you.